A major slide on Wall Street. The Dow, as you can see there, down about 1,000 points. This after a sobering assessment today.
Every single stock in the NASDAQ 100 was red today. It is the first time that has happened since March of 2020, and that's something that makes today historic.
So I think we're going to be in this choppy trading range for longer than previously expected.
Bank of America published a crazy report that scared the markets because they're claiming we are going through one of the biggest bond bubbles in our history, and they looked at data as far back as the year 1790.
This could quite literally lead China to the edge of the next Great Depression in a very short amount of time.
Michael Burry is predicting a stock market crash. He's saying that the stock market, it's going to fall 53% from today's levels.
It's just been a total bloodbath here. I'm losing, what, 5, 10, 20% of my net worth.
Well, howdy there, folks, and welcome into today's video. So if it's quiet, Jeremy, that means the stock market just collapsed. And yes, indeed, the stock market did indeed collapse today, okay? This is probably, I would say, a top 20 worst day I've ever seen in the stock market, which has happened here today.
My opinion, I believe a market crash is coming 6 to 24 months from now.
He said first that the United States economy is clearly slowing. We are seeing softening in the economy, the GDP is slowing down.
I don't believe this mess is over. I still believe stocks have another 40 to 50% to go down, if not more.
What is going to stop this now?
Well, I'm not sure it can be stopped just because we now have so many companies that I think are going to be strapped that a recession certainly, if not on the table here right now.
One leading recession indicator is flashing red as economists worry that the U.S. economy and stock market are right on the edge of a crash.
The Chinese financial infrastructure is about to fall apart. A 200 to 300 billion yuan property fund has been rumored to not be enough. Property sales are down 20%. Construction starts are down 30%.
This 0.6% month over month at this point in the cycle is shocking. It's terrifying. It means this inflation is a lot stickier than we expected.
Okay, mortgage rates are continuing to rise. Home prices, they're not coming down fast enough. This means that home affordability, it's going to worsen. The stock market will fall further. I'm going to give you the time frame of the stock market crash.
So the last day or two, we've started to see some major capitulations across all asset classes, the likes we really haven't seen since 2008 and percent looking at 1 month later.
In the fourth quarter of this year, you're going to see the food shortages and the famine in North Africa and in the Mideast. So this is obviously going to bring instability.
Goldman Sachs came on record to say that we expect home price growth to stall completely, averaging 0% in 2023.
Hey guys, it's Sash, and I have lost a lot of money investing this year, like most people who are invested in the stock market during a bear market.
U.S. housing prices just saw the largest single-month deceleration in 40 years, leading analysts to believe that housing prices have officially hit a tipping point. Month over month, national home prices have declined 0.77%.
Just today, Ethereum is down 18%, and over the past month, 36%. Bitcoin down 15%, and over the past month, about 17%.
Global volumes declined as macroeconomic trends significantly, it's a key word, significantly, worsened later in the quarter.
So again, we're getting into treacherous waters, I guess, with this aggressive Fed from here.
The more aggressive the Federal Reserve Bank is going to be, the more it's going to hurt the economy, the more it's going to hurt the stock market, the more it's going to hurt the real estate market.
We're not there yet. They're not done with raising rates. And so we know we have a meeting in about a month. Still unclear whether we will see the Fed raise rates by 0.5 percentage point or 0.75 percentage point. There are more meetings this year, but it is very clear from the Fed's messaging there is that we're not done. We're going to see rates continue to increase because we're not where we need to be, according to the Fed, in terms of lowering inflation.
The Fed is going to drive us into a Great Depression if they continue to crush the market the way they are. Of somewhere between a 15 to 20% real estate decline is likely.
Now, over the next couple of months, if you're investing right now, there's a good chance that the investments that you are buying now, they could go lower.
Earnings in the S&P 500, so the broad stock market index, actually fell 3.7%. Okay, 3.7% lower earnings than a year ago.
GDP fell by 1.4%, leading to the concerns that, wait a second, maybe we're in a recession. Like now, today.
The 100 largest developers in China reported that their contracted sales were down 35% in December. And for the year as a whole, they fell for the first time, Sophia says, in at least 5 years. I don't think I've ever seen them fall in the last 20 years.
It has been declining lately, which to me implies we're heading in the direction of not having any growth, or at least negative growth.
Fear has entered this market. Folks, on Friday, 33 million bearish contracts traded hands. That is the busiest amount of shorting and busiest day for hedging that we have seen in America since we started paying attention to it back in 1992.
This could be the next shoe to drop. You know, the economy globally and here in the US is already weakening. This energy crisis in Europe is going to be the thing that slows it down enough to push us into a recession and send stock prices even lower.
You see, this week, the stock market has been literally crashing. On Tuesday, the stock market, the Dow Jones, fell over 1,000 points.
We could end up seeing what Ray Dalio looks forward to, which is potentially an additional 20% decline in the S&P 500.
Let's talk about Bitcoin because its market cap dropped to $385 billion or less than $20,000 per Bitcoin. That's a price level that a lot of investors never thought we'd see again.
Now, the worry about a recession continues as FedEx stock dropped 21%. Now, this is a huge recession and economy indicator, and it is flashing red big time. It's saying basically that the US economy is slowing down.
Just when you thought that things could not get worse, it just did. The stock market and the recession definitely did because over the weekend, the S&P 500 dropped a massive 3.5%.
Europe, for example, has begun to face a near complete oil shutdown as their dollar falls to its lowest level in 20 years. Global inflation is the highest it's been in decades. Tighter monetary policy threatens to cause a worldwide recession, and in the words of Ray Dalio, the times ahead will be radically different from those that we've experienced in our lifetime.
On CNBC, I'm like, what's going on? They had Kanye West on CNBC today. Kanye flipping Flapjack and West? You gotta be kidding me. I was like, what am I watching right now? Oh my gosh, okay. Hey, you know, when it's a little bit slow out there, you know, throw Kanye on it.
Over 60 real estate developers are drowning in over $13 billion of bond repayments that are due this year. Consumer confidence in China is also at a multi-decade low, and it's estimated that China's property sales will go down 30% before the year ends, which is worse than 2008 when they crashed 20%.
Obviously, the interest rate increases, they are hurting the housing markets. The real estate market is slowing down dramatically, and this is what Powell wants. Powell says that we need supply and demand to get back into balance, and in order to do so, we have to go through a housing market correction.
Global equity positioning. In English, stock market is at a relative low, going all the way back to 2011 when you consider volatility and standard deviation measured by a Z-score.
A stock market crash is coming, and I'm going to explain to you why.
Two of Europe's largest economies, Germany and Italy, are already beginning to show signs of a recession. It's also found that this downward trend is already as bad as in the 2008 crisis, and this data doesn't yet reflect the current spike in energy prices, which are expected to put even more pressure on both people and businesses.
What is your best piece of advice at the moment?
Yeah, well, first of all, you mentioned that gold is down, and the reason that it's down is because investors still don't understand that the Fed is going to lose this fight with inflation, that the economy is not only already in a recession, but headed towards another financial crisis. And so the Fed, despite rising inflation, is ultimately going to try to stimulate the economy. And so we're going to have the combination of a massive recession or depression with a financial crisis and rising inflation.
When you couple those revisions to the downside, plus more negative revisions coming from analysts, which we're seeing on this particular chart right here, compounded with the potential consumer weakness coming as consumer wealth goes down, oh boy, we could be in a painful, painful market, quite frankly, not just for the rest of the year, but for the next year. I hate to say it.
I am not a fortune teller. All I'm saying is that less fertilizer equals less crops. Less crops is going to mean higher food prices. Higher food prices means more inflation and less discretionary income. More inflation and less discretionary income means bad for the economy. Bad for the economy means bad for the stock markets.
Moderate scenario suggests that the S&P 500 could fall an additional, an additional 15% from levels where we sit right now, which means we would be rivaling and potentially hitting new lows compared to what we hit in June of this year, which we thought would be the bottom.
Inflation is getting so bad in this country that game shows are now offering to pay off people's energy bills as one of their prizes.
It is going to be... It's your energy bill! We're paying your energy bill for 4 months.
The Chinese economy was expected to grow 5 to 6% this year, but analysts have just slashed that forecast in half, and brand new data released today shows that the Chinese economy contracted for the second month in a row in August. The Chinese real estate market is in trouble, with the biggest property developer in China, Country Garden Holdings, reporting a 96% drop in profit.
We have the cost of electricity, which went up 15.8% year over year, the single biggest increase since the year 1981. And then we have the food at home index, which went up 13.5% year over year, the single biggest increase since the year 1979. So we are smashing decade-long records, just maybe not the right ones.
People have finally had it, and they've reached that peak pain point, and there are a lot of market strategists that say the only way we actually end up getting out of a bad market is when retail capitulates. So some people are like, please retail, just sell already, because that's the perfect time for us to acknowledge, okay, we've hit the bottom. So today was just bad, okay? The Dow was down 1,276 points. The S&P was down 4.32%. The NASDAQ was down 5.16%. And you got volatility way up. Every single sector in the stock market today was red. Even Bitcoin was down 7.4%.
Who thinks it's too early to start buying again in this market? Raise your hand, please. Too early? Raise your hand.